It was back in the month of November that the ED of RBI, Mr. Rajeshwar Rao, had suggested that NBFCs should be regulated in a different way, and we should provide incentives for the NBFCs to convert into banks. And in line with that, we're seeing stricter norms and regulations coming in for the NBFCs. In fact, a discussion paper being put out by the central bank under which they are proposing a 4-tier structure for NBFC regulation. They have said that this 4-tier structure will ensure that NBFCs are regulated in a better way and the system becomes more sound and resilient in terms of any shocks that we have seen post incidents like INFS crisis as well as the DHFL crisis. In fact, the base layer that the RBI is now talking about, they have said that there are close to 9,400 NBFCs in the system, and majority of them, as much as 9,200 NBFCs, will fall into the base layer, and which is why they've said that the threshold for the systematically important NBFCs will now be raised from 500 crore rupees to 1,000 crore rupees. The base level for NBFCs will, in terms of their NPAs, will now be classifying NPAs on a 90-day basis for non-payment instead of 180 days, and the minimum entry point to ensure that only a more important players are in the system. The entry point has also been increased from 2 crore rupees to 20 crore rupees. As far as the middle layer NBFCs are concerned, significant changes there as well, including the introduction of internal capital adequacy assessment process, as well as certain governance changes, including rotation of auditors as well as appointment of compliance officers as well, has been prescribed by the RBI. But the most significant changes have come in the upper layer, where the RBI has said that the NBFCs that fall into the upper layer, as many as 200 of them will, as many as 20 to 30 of them will now be in terms of their regulatory framework, will have to be aligned with banks. Their CET will be prescribed, CET1 will be prescribed as 9% of their Tier 1 capital. They have said that they will also be subjected to leverage requirements as well as differential standard asset provisioning, just like the banking system. However, we at ET Now have been speaking to experts, and they indicate that one needs to see how the RBI, that already was struggling to manage with the supervision process of the banking system, will be now looking at supervising the NBFCs as well. Also, in terms of the upper layer regulations that have been put into place, there are very little incentives for NBFCs to convert into banks. So those are some of the issues that will have to be addressed by the RBI. Having said that, a time period of 30 days has been given for stakeholders to come and give their comments to the central bank.